Hello traders and welcome to another video review. Today is Friday, December 9th, 2022. Let's find out what is going on the Forex calendar. As you can see, we got only one very important event today. This is PPI data from the US Producer Price Index. Those data are scheduled for release at 2:30, and the market participants expect this Producer Price Index data to be in line with the previous reading of 0.2%. Of course, there's a core PPI which should increase to 0.2% from 0, and that's about everything about the PPI. More important data during the New York sessions are in the form of the Michigan consumer expectations and Michigan consumer sentiment data scheduled for release at 4 p.m. As you can see, the consumer barely improves in the US. WASDA report as well. US Baker Hughes oil rig count for all of you crude oil traders. This oil rig count data should be presented to you at 7 p.m. Last time it was 627 oil rigs in the US. And of course, we got some of speeches at the end of the day from the ECB. And the CFTC speculative positions data presented to the traders at the end of the week are scheduled for release at 9:30. So the overall Forex calendar doesn't look busy today. Of course, the New York session looks quite good in terms of the data release. PPI, very important data, so definitely traders should take a look at this kind of the data when they are released, and of course stay focused and vigilant, because of plenty of the data are from the US, and the main currency in the US is the US dollar. Let's find out what is going on the US dollar index. Daily time frame chart of the US dollar index is showing us a decline from the recent highs located at 113.76 made at the end of the September 2022, and of course this decline includes the lower highs, as you can see here, and consecutive lower lows. So if we apparently put some kind of a horizontal line as the high for the of the recent rally, and the technical resistance, 114.75, then of course the main technical resistance would be located around this level here, 109.60, 109.51. so let's do the extreme 109.51. That's the main technical resistance. Let's make it red. Okay, there you go. Let's make it red again. Let's make it red. Make it red, please. Make it red. Thank you. So we got this technical resistance, and of course, since then the next local levels, local highs will act as a technical resistance as well. So the next important technical resistance is around 107.65. Okay, so this is the level. Because it's a technical resistance, let's make it red again. Okay, so that's, as you can see, those lows here had been tested very nicely, and we got the extension to the downside. So where is the next technical support? Maybe we know where is the resistance. Where is the technical support? Well, it was here. Okay, that was the technical support, 104.62. However, it was violated because the local low is located at 104.04. We got the nice bounce, a local bounce, however, not that big in terms of the gaining the territory during that bounce. And right now we are approaching the weekly lows on the US dollar index. So if in the case of a breakout here, where is the next technical support, next important technical support? For sure, we can say that there is one here, 103.39. That's the one, and the other one is located here. The lows at the 13th of the May 2022. This is the level of 101.27. So it looks like those are technical support levels. And if we take a look at the momentum, we can see definitely the momentum is weak. It's negative and weak, doing up and downs inside the negative territory. So the bears have a control of the US dollar index. They keep pushing this market lower and lower. So one more interesting thing here is to put the simple moving average. Okay, simple moving average. This is 9 days ahead. Okay, let's try to make it, for example, a little bit longer. Let's make it like, let's say 50 days moving average. As you can see, 50 days moving average is reversing lower. It's been very nice indicator so far, and every time the price hit this average, bounce it and make a new, for example, new high. Nevertheless, since the top was formed here, moving average, 50 periods moving average is now reversing lower. What is 100 days moving average doing? Are we above the 100 days moving average or below the 100 days moving average? Let's take a look. This is 97, 99, 100 days moving average is getting flatter. And as you can see, is kind of a not. It's all almost pointing to the downside as well. So the most important thing is that the price is already below the 100 days moving average on the simple moving average on the daily time frame chart. So this is the situation that we have on the US dollar index. And if you want to put things into the perspective, please take a look here. There you go. The market has been trading above the moving average for at least this. There's the breakout. Okay, let's say 16th of the June 2021. So that's easily over a year and a half. Yeah, we got the December. So almost, yeah, there you go, almost a year and 4 months. And then we got the breakout lower. So that's a very important signal. That's a very important thing the market is trying to tell us. Right now we are below the 100 days moving average. The bears have a control over the market. We expect lower prices to be seen soon. So that's the US dollar index. Let's find out what the S&P 500 is doing. We got the SPX. There you go. So that's the daily. So that's the time frame chart of the S&P 500, as you can see here. And the situation with the 100 days moving average is quite similar. We've been above the moving average for quite so long, bouncing up, bouncing and bouncing. A recent high at the beginning of 2022 was made here, and since then, as you can see, breakout, test, breakout lower, test, breakout lower, breakout lower. Then you have a false breakout here above the average. Nevertheless, after the false breakout, a new yearly high was made, and since then the market is trying to move higher. Let's find out how this is going on the daily time frame chart, how the market is coping with moving higher. So what do we have here basically is the yearly low. The yearly low is 3,490. That's the yearly low. So let's make it a technical support. There you go. And the nearest technical resistance, which is important one, is located here at the high from the 16th of the August. So almost, you see, almost 5 months ago. So that's the technical resistance, 4,324. The market has been trying to bounce, of course, from this lows recently. If we put a line here, we can clearly see that the market is trading right now above this line. Let me just make it a little bit thicker. There you go. Bouncing above the 100 days moving average, and then the second time, then making new high, then again bounced, broke below the trend line. It's obvious, right? Nevertheless, it bounced from the technical, from the simple moving average, 100 periods, 100 days moving average. So right now we are kind of a close in this range. The range is located between, of course, the lows here. To be honest, 3,900 and let's say 4. So that's the low of the range, and the upper level of the range is, of course, this pin bar here, this doji pin bar here, 4,100, and we've been, trading inside of this range since 17th of the November, so over 2 weeks. And now neither bulls nor bears know where to go, because any breakout below this level will be, let me just change the color of the SMA if I can, because it might get you might get confused. So I don't know, maybe we will do it black. There you go, black. So maybe a breakout below 3,904 will extend the down move for sure, because we will be below the 100 days moving average and below the short-term trend line here. Okay, so that's obvious. Nevertheless, if we keep moving higher, and if the market breaks above 4,100, then of course the next target is eventually this high here, 4,154, and then of course 4,324. So this the swing high basically. But because it's December, it's the end of the year, we shouldn't be expecting too much from this up move. Never mind the kind of a still positive momentum, right? But the momentum is coming from the positive zone, from the positive area. So that was considered as a positive, strong, bullish movement, and it looks like it bounced from the 48.89, which is below the level of 50. Level 50 is neutral, and right now it's like a kind of a hovering around the level of 50, 48, 52. So that's exactly between the level of 50. So I guess that the breakout below will make the momentum to reverse sharply to the downside, and then the bears might extend the sell-off. So please keep an eye, especially on the technical support, because it looks like the market is losing the positive momentum, is losing the steam, and it wants to extend to the downside. So that's the S&P 500. One last market connected with the markets of course US dollar and S&P 500 is the euro dollar, and there is an interesting situation as well, because take a look at this 100 days moving average. Big picture first, big picture, topping here, topping, and then the market is breaking the 100 days moving average, moving lower, below the 100 days moving average, and then you have a breakout, and the 100 days moving average starts to flatten, and it looks like it wants to go higher. So right now what we have on this market is still positive momentum, very seriously almost overbought market conditions around 105, 106. The target is still very close to the level of 1.06. I think 10 is 38% of the Fibonacci retracement of the whole big wave down. So if you don't mind me putting this on the screen one more time, this is the Fibonacci retracement, and if there you go, if that's the high, so the 38% is located. Okay, we need to do it the other way. Yeah, this is there you go, from the bottom to the high, a little bit higher. There you go. 38% is just here. So as you can see, around that level, somewhere here. Yeah, there you go. And it was hit. Basically, that's what I mean. 38% was hit already. So there is a 50% and 61%. 61% is particularly interesting because it's in line with this technical resistance. Nevertheless, this move to the upside, as you can see here, might be the last move to the upside that the bulls will do, basically, because both the US dollar index and the S&P 500 are in the places where the reversal is possible. So please keep an eye on this internal market flows, let me say, market mechanism, right? The euro dollar is going down, S&P 500 is going down, the US dollar index is going up. That's the general rule. Okay, so maybe the 38% is everything that the bulls can do in this situation, and after the short-term flattening of the S&P of the simple moving average. We might have another move to the downside at the end of the year and end of the month of December 2022 and at the beginning of the 2023. So that's a kind of a little bit longer outlook to put the things into the perspective. Let me just move this. There you go. Yeah, that's correct. So that's my outlook for the euro dollar, US dollar index, and S&P 500 at the end of the week. So thank you very much for watching it, and I hope I see you guys next week. Take care and bye bye.